Misconceptions of a marginal tax rate. People get this confused all the time, so we're going to try to bring some clarity to you today. Hello everybody, I'm Mark Pruitt with Strategic Estate Planning Services. I'm joined here today with Lamar Kerr, who is a CPA. Glad that you're with us, Lamar.
I'm glad to be here.
And we're going to try to do some things that people bring into the office and they think they're paying taxes on all of this money at one rate, and it's not. And so I brought Lamar in to be able to explain this as far as exactly what is a marginal tax rate and how that works. So Lamar, see if you can walk them through that.
Okay. Well, the term marginal tax rate, which you may or may not have heard, refers to the tax rate you're paying on the last dollar of taxable income you earned. And so what that means, for example, and you'll be able to see this on the screen, is there are 7 different marginal tax rates. They range from 0 to 37%. And so what that means is that the marginal rate that's applied to your income will vary based upon it'll vary based upon that income level you're at. So for example, if you're I'm just going to pick the 22% tax rate there. You can see both information is there for both single filers and those that are married filing jointly. But for the married filing jointly, for example, that 22% applies to taxable income anywhere between $89,450 and $190,750. So for the taxable income between those two numbers, it is taxed at 22%. But below that, down to the 22,000 level, it's taxed at 12. And then from, below 22,000, it's taxed at 10. So the marginal tax rate for you, if you're in that $89,000 to $190,000 range, is going to be 22%. But effectively, and we'll hear the term effective tax rate at times, your effective rate's going to be, lower than that because your income is taxed at 3 different rates, before in total, although the marginal is at that 22% level in that example.
So what you're really saying then is not the whole, let's say you're making $100,000, the whole $100,000 is not taxed at that 22% rate.
That's correct.
So using your chart that you say 0 to 22,000, if you're married, filing jointly, of that 100, 22,000 is taxed at 10%.
That's correct.
And then when you go from 22 to 89,450, that portion is taxed at 12.
That's correct.
Right? So you're really only looking at 22% tax rate on money that's over that 89,450.
That's correct.
So it's not much that's actually taxed at 22%. That's why people need to understand there's a difference between marginal tax rates within brackets like Lamar's talking about, but then the overall effective tax.
Right.
Right?
Right. And it's really important to understand the concept, particularly if you have choices with maybe how you create some of your income. That's where tax planning comes into play.
Correct.
The biggest example here is if you're in the 24% marginal bracket and you happen to be up close to that 364,000 level, you have a decision to make if it comes to creating, maybe taking money out of an IRA, for example, because it might not be at 24%. You may kick yourself up into that 32% bracket, and that's just a different picture there to think about. Right. Do I still want to do that if it's going to be taxed at 32%?
And that's important then to get with someone that is a planning firm that can walk through that with you. I know one of the things we have here at Strategic Estate Planning is we have tax software where they can come in, bring in their tax statements, we can upload that, and then it spits out a report that can basically show them where the positives are that they're doing within their own taxes, but also areas of improvement that they can do as well.
That's right. Where it gives us that report that we can use with some key information and points on it. And it also allows us to do some planning on, okay, this is based upon the last year's tax return. What do we think the current year is going to look like?
Right.
And then based upon that, it can help make decisions on things you may do financially. There's one more key point I want to make about
Sure.
this. These numbers we're talking about, where these tax rates fall, that's taxable income. So that's not adjusted gross income, or really what you might think of as your total income, because before you get to taxable income, you get what most people end up doing is taking the standard deduction.
Correct.
So that will take, for example, your total income. It's reduced by that deduction to get down to that taxable income number.
That's where I tell people all the time, try not to operate on yourself.
Right. It's just an important thing to keep in mind, the tax implications on creating income, especially when you're retired and you may have different buckets, as we call them, to pull money from, and just how's that going to be taxed? And then again, a topic for another video, Mark, which would be what happens when you think you're pulling income and it's going to be taxed at 24%, but you unknowingly may create effectively other tax through what it does to other parts of your income, or what it may do to things like your Medicare premium, for example.
Right, like IRMA.
Right.
Exactly, it makes a big difference.
So,
yeah. So I will encourage you, feel free to call the office, 1-800-381-8870. I would tell you to specifically ask for Lamar in regards to tax planning, because he is a CPA. That's one of many reasons why he's here. It's not the only reason. He does wears a lot of hats for us, but he does a lot of the tax planning, and he can go through this with you and your family to make sure the decisions that you're making are sound and that there's no surprises at the end because you thought it was one way and it ended up being another way. Lamar, thank you for being here, my friend. Hopefully that clears it up. The bottom line for you guys to remember is this. Just because you make X amount of money does not mean it's all taxed at the same rate. Would that be a good way to summarize?
That's a good way that's a good summarization.
Good. I appreciate it. Thank you guys for being here. If you felt like this was helpful, and subscribe to the channel. Lots of good videos like this that are shorter and are right to the point and can be able to help you navigate your estate and financial plan. Because when it comes to your money,
It pays to be strategic.